Welcome back to Blockchain Basics. Today we're going to be looking at Bitcoin, and we're going to try to figure out whether 2022 is going to be the year of the bull market continuation or if we're about to head into a bear market. So let's jump in. If you watched my first video, you already have all the tools you need to understand this market. First, when an asset is moving up, it moves up in a 5-wave pattern. And when it's moving down, it moves down in an ABC 3-wave pattern. Next, we can use a crash to predict how high an asset might go using a Fibonacci retracement, which measures the length of the fall and predicts the height of the next wave at this 4.236 extension. We previously used both of these tools to predict how high Bitcoin would go. We noticed that we had created 4 of the 5 waves already, and to predict how high wave 5 would go, we used the Fibonacci retracement, which suggested the high would be somewhere around $73,000. Notably, that also made sense when looking at the previous super cycle and comparing it to this one. With major levels of resistance and support coming in around the same areas, and a target that put us between $70,000 and $85,000. And that information prompted my first video, which I posted in here, where I said that Bitcoin would head higher one more time, but that it wouldn't make it higher than $85,000 and likely wouldn't even make it higher than $73,000. Well, it got to $69,000 exactly on November 10th, just 4 or 5 days after I made that first video, and since then it has been in a major correction, where Bitcoin's lost 42 to 43% of its value, and it's currently sitting at $43,000 as I record this, 37% below its all-time high. Now, my second video, which came out in here, I said I thought we were going on a 5-wave pattern up, and that we'd still go a little higher, but hardly higher at all, up to hit that $73,000 range. Importantly, I mentioned that in order for this to happen, we could not cross below wave 1, which clearly we have done. That invalidates this prediction. I don't believe that something like this will happen. So let's find out what could happen. So the first thing to look at is, where is Bitcoin going to be able to find a bottom and turn around and start a move back up again? And this is important because nothing ever falls forever. Even in a bear market, when an asset crashes, it will retrace and make up a significant portion of those gains again before it crashes further. Let's take a look at that. We can zoom into the last bull market cycle and see what happened after the top came in. Now, inevitably, the price went from all the way up here at $20,000 down here to the lows at $3,000. Losing 83% of Bitcoin's value. However, it got there over the span of an entire year. When we look even closer at this, we can see exactly how this played out, with an initial 43% crash, followed by an ABC correction. And remember, on a bullish price chart, we move up in 5-wave patterns, and on bearish price charts, we move up in ABC patterns, because it's just a temporary correction, a retracement, before we go on further down. Now, when we lay a Fibonacci retracement over this, we can see that from this initial fall, the amount we retraced was exactly up to the 702 retracement, with the A wave getting us up to the 618 and then crashing back almost down to the bottom again. When we go even further back to the 2013 market cycle, we see something similar. Let's zoom in. This time, we have a 53% crash, again followed by a 702 retracement before going lower. So now that we've seen what Bitcoin has done in previous bear markets, we can apply that to today's chart. Now, as we showed earlier, Bitcoin's already lost 43% of its value, which is exactly how much it lost in the 2017 bear market. If it did something similar to the 2013 bear market, that would put it down around $30,000. These two levels at $40,000 and $30,000 are also significant within the last year, with $40,000 providing resistance here, here, and here, and then acting as support here, here, and currently. $30,000, on the other hand, provided support multiple times in the past as well. I don't think there's any way to confidently say where Bitcoin will turn around, but these are the two most likely price points in my opinion. Now, although you might expect $30,000 to be the more bearish scenario and for the more bullish scenario to be to move up from here, I actually believe the opposite is true. If Bitcoin does make it down to $30,000, I think there is a reasonable chance that we could see new all-time highs this year. If Bitcoin retraces from here, and especially if it heads into a very volatile ABC correction, then I think it's game over, and it's time to exit the market for a little while until prices come back down. However, if things do head lower, then I think there's a fair chance of us seeing a continuation. Throughout its history, Bitcoin has corrected with downward price trends, which is not surprising. As assets crash, they tend to have lower highs and lower lows. But this is not the only way that corrections can happen. And now that Bitcoin is roughly $1 trillion asset, let's take a look at another multi-trillion-dollar asset, mainly the US stock market, represented here by the S&P 500. Here we can see that the S&P does have major corrections that take place over periods of over a decade in length. However, it continues to have higher highs throughout the correction, creating these expanding wedge patterns. You can see it still makes an ABC correction, but now wave B comes up higher than the initial wave. And same thing happened down here. If a correction has a downward slope to it, it's considered an expanding wedge. If it doesn't have a slope, it's considered a flat correction. This is a flat correction because C does not come lower than wave A. This is an expanding wedge because E comes lower than A and C. For something similar to happen with Bitcoin, that would mean we would come back down to the low $30,000 range or even into the $20,000 range. On the macro perspective, that would mean that we're still in the correction. And so when we go to draw our 5 waves, we would have to take that into consideration, with this being the top of wave 3 and wave 4 not ending until somewhere around here. That would give us a 5th wave, which before we thought that this over here was wave 5. So how do we figure out how high wave 5 would go in this scenario? First, we can say, well, wave 1 and wave 5 are often similar in length, so what if we just copy wave 1 and move it over to where we think wave 5 is going to start? That gets us out to about $120,000. That's a pretty crude way to estimate, but it gives us a general idea. Now, our Fibonacci extensions are not going to be that helpful for us in the standard view because, as you can see, we almost hit it to begin with. So in order to get higher price predictions out of the Fibonacci tool, we're going to make a change. In settings, you can change the Fibonacci levels so that they're based on a logarithmic scale instead of a linear scale. And notice what that'll do to these prices over here. It bumps each of the lines up. We can also add on a few extra Fibonacci numbers that were previously hidden, so we have some extra price targets. In this scenario, you see that we actually are not anywhere close to hitting the full Fibonacci retracement, but we did successfully hit this 1.618 level twice. If you're unfamiliar, 1.618, which in a percentage form is 161.8%, that's the golden ratio. So we successfully hit the 1.618, and our next target here would be the $125,000 range. And if we do make a fall that looks something like this, you'll notice that the 1.618 range falls in the same exact spot. For now, this is all speculation. However, we'll see how it plays out. Over the next few months, do we head down to $30,000? And then after that, do we correct up in a systematic fashion over the rest of the year, trending higher and higher until we hit $100,000 to $120,000. I'm not saying it's likely, just that it's a possibility. The other possibility is a multi-year prolonged bear market. For this to play out, we'd have to accept that this was our fifth wave that we were waiting for, and that we just didn't notice it because it was so small. We were expecting something more like this, and we didn't get it. But we did make new all-time highs. We didn't come down below wave 1 for wave 4, so it fits all the rules for Elliott wave theory, but it doesn't quite get us up to $73,000. And we had picked $73,000 as our target because that would have completed the Fibonacci extension. But we didn't quite get there. We fell about 6% short. However, this is on the Bitcoin US dollar price chart. We're going to quickly look at the Bitcoin market cap chart, meaning the price of each Bitcoin multiplied by the number of Bitcoins in circulation. And when we look over here, we see a similar chart, except we notice that this one has hit its full Fibonacci extension based on the market cap of Bitcoin rather than the price chart. Not only has Bitcoin reached its Fibonacci extension, but if we look up the Ethereum market cap chart, we see that Ethereum, the second largest cryptocurrency, has also reached its 4.236 extension based off of its market cap, not its price chart. So we do have to take that into consideration. The other thing we have to take into consideration is what has happened at the end of both of the previous cryptocurrency market cycles. And to do this, I'm going to add on another chart. Down here in orange is the total market cap for all of the cryptocurrencies that are not Bitcoin. And you can see that at the very end of the market cycle, as Bitcoin was reaching its top, the altcoins started to catch up. And if you mark the exact day that Bitcoin reaches its top, you can see that actually the altcoins made their high as Bitcoin headed into that 702 retracement. Now this chart doesn't go back far enough to show the 2013 market cycle, but if we add on a coin that was around back then, you can see the same thing happened in 2013 as well. As Bitcoin hit its all-time high, that was when the altcoins headed into a parabolic rally. And the reason for this is very simple. As people have made a lot of money off of Bitcoin, they now have money to invest in other currencies. Smart money is going to get out of Bitcoin, which is high, and go after the other coins that haven't done anything. And so that's what we see happen in 2013, and it's what we see happen in 2017, and it's also what we saw happen this May. As Bitcoin initially hit $64,000 and then retraced, we saw not just XRP, we see the other coins do it as well. We can see that during the bear markets, the other coins do very poorly, and that it's really during these short periods of time that the altcoins really outperform Bitcoin, including at the end of each market cycle. And we saw the same thing happen in the mid-cycle as we did in 2017, with all of the coins moving up together in March, April, and May as Bitcoin found its local top around 64,000. And since then, we've seen nothing. So if we are about to head into a bear market, we know we're going to retrace, and I would be expecting to see the altcoins start to take away some of Bitcoin's market dominance as it happened. All right, so I know I just threw a lot at you guys. So to summarize, I'm going to make this really clear. We know that at some point Bitcoin is going to retrace, whether it retraces from down here and heads back up, or if it retraces from here to head back up. We're very likely to revisit this price range here within the next few months, between $55,000 and $60,000 or so. But from there, how do we determine whether we go up or head down? And this is really going to come down to two things for me. First of all, if we just head up from here, then I think it's more likely that we're headed down lower. Whereas if we come down lower first and then head up, I think either of these are likely scenario. So let's focus on this scenario where we head down to around $30,000. For scenario A to take place and the bull market to continue, we need to head down to around 30,000 and then systematically start working our way up in 5-wave patterns. From that point, we might see
a correction come in, but it won't be a very large one, and then we'll continue on moving up higher. In this scenario, the altcoins are likely to move up in value compared to the US dollar, but they probably won't make a lot of ground compared to Bitcoin, meaning Bitcoin will again be stealing the attention of the market until it gets up into these higher prices, and then we can expect to see more movement in the altcoin market. If, on the other hand, we're headed into a bear market, we're looking for a volatile A, B, C correction to take us up into the retracement zone, and we would expect to see altcoins outperforming Bitcoin during this time period. If that happens, then I'd be fairly confident that we're headed lower. I hope I was able to explain this in a way that makes sense to you guys. I'm not on here to predict the price of Bitcoin or any other cryptocurrency. I'm simply here to show you what I see in the charts. I hope that through these videos, you're beginning to understand how the markets move and how you can try to predict what's going to happen next. Of course, nothing is ever guaranteed, and I am not a financial advisor, nor do I have any serious training in technical analysis. If you enjoyed this video, please give it a thumbs up, consider subscribing to the channel, and I'll see you in the next one. Thanks for watching.